What if every bank in the world shut down in just 1 week? No cash, no payments, no salaries, everything frozen overnight, just like that. This actually almost happened in real life, and most people have no idea. One giant company's fall nearly took down every single bank on the planet. Millions of families lost their homes, jobs, and savings in just months. Stay right here. We are going to break this down super simply for you. Welcome to World Invests, where big money stories get explained super simply. Let us go back to the early 2000s when everything seemed absolutely perfect. Banks were making huge profits and everyone was feeling incredibly rich and happy. People wanted to buy houses and banks were happily giving loans to everyone. Even people with no steady jobs were getting approved for big house loans. Banks thought housing prices would rise forever, so the risk felt totally fine. A family earning very little money could suddenly own a beautiful big house. This sounds amazing, right? But underneath it was a ticking time bomb. The more loans banks gave out, the more dangerous everything secretly became. From 2000 to 2006, house prices kept rising every single month without stopping. People were buying houses just to sell them later at much higher prices. A house bought for $100,000 sold for double in 3 years. Everyone was excited. Flipping houses felt like printing free money every day. Banks were competing with each other just to give out more and more loans. The more loans they gave, the more houses people bought. Prices kept climbing. Nobody asked, what happens if the prices suddenly stop going up someday? That question was the most dangerous question nobody wanted to answer out loud. Now here is where things get really sneaky, and honestly a little scary. Banks took all those risky loans and bundled them together into special packages. These packages were called mortgage-backed securities, basically boxes full of loans. Imagine a mystery box. Nobody fully knew what dangerous stuff was packed inside. Banks then sold these mystery boxes to investors all around the entire world. Big investors in other countries were buying these boxes thinking they were totally safe. Credit rating agencies gave these boxes top safety ratings, like an A+ grade. But inside those boxes were thousands of loans from people who could not pay. The whole system was built on a shaky foundation that nobody wanted to admit. Think of it like a tall tower of cards. One shake and everything falls. By 2006, the cracks were quietly starting to appear at the very bottom. In 2006, house prices finally stopped climbing, then slowly started going down. People who bought houses to flip them suddenly could not sell them anymore. Loan payments became impossible for millions of families across the entire country. Banks started getting back empty houses instead of money. This was a big problem. Those mystery boxes full of loans were now worth almost absolutely nothing at all. Investors worldwide who bought those boxes started panicking and losing enormous money. Small banks started struggling. Then bigger banks started showing signs of serious trouble. By 2007, warning signs were flashing everywhere, but most leaders ignored the signals. Bear Stearns, a giant financial company, collapsed in March 2008 from these bad loans. The government quietly helped rescue Bear Stearns, but the real storm was still coming. Now meet Lehman Brothers, a banking giant that had survived for 158 years. They had been through wars, recessions, and disasters. They seemed absolutely unbreakable. Lehman had bought enormous amounts of those risky mortgage boxes using borrowed money. When house prices crashed, all those boxes became nearly worthless almost overnight, completely. Lehman owed so much borrowed money that they could not pay anyone back anymore. On September 14, 2008, Lehman Brothers announced they had completely run out of money. The next morning, September 15, 2008, Lehman Brothers officially filed for bankruptcy, forever. It was the biggest company failure in the entire history of the world, ever. Over 25,000 employees showed up to work and suddenly had no jobs that morning. Workers walked out of the building carrying boxes. Photos went around the whole world.
The news hit global markets like a massive earthquake nobody was prepared to handle. Stock markets around the entire world started crashing within just hours of the news. That single day changed everything. The financial world would never be the same. Within days, banks stopped trusting each other and refused to lend any money. If banks do not lend to each other, the whole financial system completely freezes. Businesses could not borrow money to pay their workers. Layoffs started happening everywhere. Regular people started lining up at banks, trying desperately to take their money out. In some countries, people pulled out so much cash that banks almost ran empty. The stock market lost trillions of dollars in value in just a matter of days. Retirement savings that people spent 40 years building disappeared incredibly fast overnight. Factories shut down, car companies begged for help, stores closed across the country. The unemployment rate in the country jumped from 5% to 10% fast. Around the world, 8 million people lost their jobs because of this one crisis. This was not just a money problem anymore, it was a human life crisis. Governments around the world realized they had to act fast or face total disaster. The central bank of the country started pumping massive amounts of money into banks. Interest rates were cut to almost zero so people could borrow money more easily. The government created a massive $700 billion rescue plan called TARP. TARP stood for Troubled Asset Relief Program, basically buying all those bad mystery boxes. Giant banks like Citigroup and Bank of America received billions in emergency government support. The car industry received a massive bailout too, saving millions of manufacturing jobs instantly. Other countries around the world did the same thing, printing and pumping out money. The goal was simple: stop the panic, restore trust, and keep the system alive. It worked, but it took years of incredibly painful recovery for regular families everywhere. The government's fast action was the only thing standing between order and complete chaos. Without that rescue, experts say the entire global economy could have completely shut down. By 2009, the worst was over, but millions of families were still badly hurting. House values dropped so much that people owed more than their homes were worth. Young people graduating college that year could not find jobs for many long months. Trust in banks and financial leaders hit the lowest point in many decades worldwide. New rules were created so banks could never take such enormous secret risks again. The Dodd-Frank Act was passed in 2010 to add stricter controls on big banks. Banks now had to hold more real money and could not bet so recklessly. The people who created those risky mystery boxes faced investigations and serious public anger. But honestly, very few powerful people actually faced real serious consequences for their actions. The crisis showed the world that greed without rules can destroy millions of innocent lives. A 10-year-old can understand this: if you spend money you do not have, trouble follows. The same truth applies to the biggest banks and companies in the entire world, too. What happened in 2008 is studied in every major university around the world still today. In just 1 week, the world's financial system nearly came to a complete total stop. One company's collapse triggered a chain reaction that shook every single country on Earth. Millions of real people paid the price for decisions made by a very powerful few. The 2008 crisis is proof that money systems need honesty, rules, and real accountability, always. Now you know the real story, and knowing this protects you for your whole future. If this story opened your eyes, share it with someone who needs to hear it. Like, subscribe, and follow Syorld Invests for more real-world money stories explained simply.